CBS shareholders are scheduled to meet today. Officials at the broadcaster are hoping it's at the tail end of a storm of negative headlines related to workplace culture. Joining us right now for a look at what to expect today, as well as what's working in the media world, is Tuna Amobi, CFRA's senior media and entertainment equity analyst. And Tuna, this has been a long time coming. We've been watching these headlines for I can't even remember how long. You really think that this is a turning point?
Thanks, Becky. Sure. I think I think it's almost safe to say that the third merger attempt between CBS and Viacom is almost like a charm, right? Mm-hmm. So we've had this news for quite some time, speculation on and off. When you look at today's environment, all of the indicators point towards that there's probably more than a 90% chance that we could see a merger announcement this year between CBS and Viacom. So that's how I would handicap that.
If that's the case, play the parlor game of who ends up leading it.
I would say, Becky, that Robert Bakish is in a pole position to run the combined company. It's almost like he's to lose at this point. So
if you're someone who's been on the sidelines waiting to see what happens, what would you tell an investor to do at this point? CBS shares $47.62. We'll take a look at Viacom shares, too. But if you think that there's a 90% chance of a merger happening, is that a reason to buy either one of these stocks?
We have buy recommendations on both. Granted that the outlook for both have been clouded somewhat by the overhang of the merger announcement speculation. But I think when CBS extended Joe Ianniello's contract for the end of the year, they've had some problems filling the permanent CEO position. We think that gets resolved. But more importantly, I think both companies have made a very credible attempt to articulate a direct-to-consumer strategy, which at the end of the day, whether the merger happens or not, this is something that is very, very important for both companies to get a buy-in from Wall Street.
Do you think they have that right now? That's my question. Is this what shareholders want too?
I do. I think last quarter, last earnings, CBS came out and really made a very compelling, showing in terms of the outlook for direct-to-consumer. The projections as they've put out for CBS, for Showtime and All Access are quite impressive, and other catalysts that we see. Viacom as well, coming off their acquisition of Pluto TV and concentrating on non-advertising, faster-growing revenue streams. Our take, Becky, is that either independently or combined, these companies are going to be just fine.
The argument on the street exists that they can't stay independent because they're each too small. That if they don't get back together, then they're going to have to be bought by somebody else. Would you agree with that?
I think there's more likelihood that they get back together than being bought by someone else. Sure, scale argument continues to persist. You could argue that both companies are subscale in this current environment where Disney and
they keep getting bigger. Yeah.
That's right. So that's one rationale that we think kind of motivates this potential combination.
What are the synergies if they do wind up back together? Where would you see them making advances? What's the advantage of being together?
Right. I think conservatively, $1 billion in cost synergies is quite achievable. When you think about Disney, Fox talking about $2 billion, there's no reason why we don't think $1 billion, on the low end potentially is justifiable here.
Okay. Tuna, I want to thank you very much for your time today. But by the way, while you're here, other names in the media world that you also have buys on?
Sinclair might surprise you coming off of their acquisition of Regional Sports. That deal was attractively, priced, and we know sports is quite compelling as the glue that kind of holds together the bundle in this kind of fragmenting landscape. We also like, Disney, of course, a strong buy on their direct-to-consumer shift. And those are our top picks right now.